Hello everyone, happy Tuesday. Thanks for coming to the webinar today. My name is Triffany Hammond. I'm the founder at triffx.com, and I'm a support and resistance trader. What I like to do is find those major support and resistance levels, starting with a daily chart, moving down to a 4-hour chart, and then down to a 1-hour chart. The key thing to consider here is it's not so much about the time frames that you choose, as much as it is identifying the time frame that you like to trade and then being willing to draw back in scope and understanding and context for price just a little bit so you can get a better idea of where the market might be headed next. One thing that I do encourage everyone at every webinar that I ever do is to make sure that you're planning your trades well ahead of time. You're keeping good track of your trades. And if you're not trading yet, I always encourage good, strong back testing and or forward testing. Please don't just dive in with a bunch of money thinking that this is a miracle cure to all your financial woes. So let's get rid of our little sample lines here. This was for the sake of making sure video was seeable. And we'll start with the euro dollar. So as I said, I like to start the daily chart, so that's where we're starting out now. My favorite place to take a trade, my favorite time frame for swing trading is the 1-hour chart. So for me, my middle context is the 4-hour, my broadest context is the daily chart. Now we've been talking about the euro dollar for a long time, simply because it had such an impulsive sell-off in here. We had a very large downturn, and then we had this kind of a middle of the road time frame pullback or new direction, right? You're never quite sure at the beginning of a new trend. But what we did get for a while was definitely higher highs and higher lows. What we also got with that was nice big wide swing, middle swing, and then tightening up, and we started to see our indecision in there, right? As we talk about every week and what goes on with price, is that one of our biggest indicators that things are starting to slow down is that sort of triangulation that happens as the trend tires out. Now things can triangulate sideways, but they can also triangulate in the direction of their trend. Now by tiring out, that doesn't necessarily mean that they have to reverse. Sometimes things can tire out, take a good long pause, and then just continue. But it's our responsibility in terms of identifying times that it's best to plan our trade, to identify that tiring out, give the market that chance to sort of wash itself out, let the dust settle, and then once it picks a direction, we pick a direction with it. So that's what we're looking at even now in current price. What we have off of this little uptrend on a 4-hour chart, see on a daily chart this looks like just a simple pullback of the previous downtrend, right? On a 4-hour chart, or especially a 1-hour chart, this all looked like a nice big uptrend. But regardless, and we don't know right now, right? We don't know. But what we do have off of this tiring out was a very quick emotional sell-off. These levels we talked about last week, as being potential retracement levels. These are levels that the market left periods of consolidation so suddenly that it didn't look back. It didn't go back and retest those levels as price is often does. Okay? We have those once the price came short as untested levels up here. We still have some down here too, particularly this nice large one here on the 4-hour chart, a 1.24 level that got left when the price went long. So we have a reason to believe on either side of these that the market could be looking at a corrective wave. Now we've got one to go long and we've got one going short, right? Do we have any way to ensure that price is going to go one direction or the other? No, we never do, right? We only have the snapshot in time that we have right in front of us at this particular point. But what we can do by broadening our scope and looking at that longer term time frame is identify the possibilities and the probabilities on either side of the trade. Sometimes they're more heavily weighted in one direction. Sometimes they're equal. Sometimes everything's just a mess and you have to skip on that pair for the day. So in this case, we have good reason to look at this trade in either direction. Okay, we can look at it as a possibility to go long and a possibility to go short. Now, one other thing before I leave the daily chart and ask for questions is that in the context of this 4-hour up trend right here, we actually did get a little shoulder, a tall head that was very quickly corrected, and another little stubby shoulder in here that could be signaling a potential reversal on this back to the overall downside of the longer term time frame. Okay, that could be the case. In fact, it is not only closed below the neckline here at 1.2730, but it actually has come back up and retested that neckline. So the area we're in right now between 1.2730 and even the extreme down here at 1.26, say, either side of that range is going to be fairly significant depending on which side it breaks out. I like that. I like fairly significant because once those levels are broken, that gives me a good chance to get in there. What I don't like and what I'm not interested in being a part of is kind of this confusing back and forth stuff that the market does while it's taking its pause. Okay, were there any questions on the daily chart stuff? Oops. I did not mean to highlight the line. I meant to highlight the box and clean the chart up. So I'll clean this up and you let me know if you have questions. None for the daily. Okay, great. Jerry, sure, if we have the time, we can definitely look at the pound. Okay. So on the 4-hour chart, remember I talked about that triangulation. Triangles are really cool in the equities market. They're a continuation pattern. People like them because that tightening up of sentiment seems unique. But let me tell you, in Forex, the triangulation happens constantly. Almost every time you have a consolidation area, you have a triangulation of that area. So they lose a little less of their unique sentiment. They're a little less exciting. But what they're telling us is that the market is on pause. It just isn't sure of direction right now. And when the market is on pause, it's a great place for us to make a trading plan and to let the market signal the next trade. So you can see here we have a nice wide swing, right? Here's our interim swing, and we should be looking for some tightening up. Chances are good right between this 1.2730 and this secondary level of support and resistance within the consolidation area at 1.2675 or so. Okay? So those of you who like consolidations, the triangulation is something to consider in terms of profit targets, right? If you know it's harder for the market to reach its ultimate highs or its ultimate lows, when you play that consolidation bounce inside of those levels, you're going to have a higher probability getting to a secondary low or a secondary high than you're going to get shooting for the ultimate highs and lows. Now, I don't like the consolidations. I don't like to play the consolidations, I should say. I like to see them because they show me that for that pair and that snapshot in time, things are doing what they normally do. But that for me, that's just a chance to start to plan my trade. For you, that might be, this might be your ideal trading conditions. And if you're not sure, hit that back testing, right? Find your own preferences. Find the way that you like to trade. So here we are, the wide swing, the interim swing. Chances are really good. We'll at least get a few candles in here as things kind of nudge around sideways. There's no trade set up here for me yet. But once I move down to the 1-hour chart, once I see that further triangulation go on inside of this, and I might even get one more tighter zone. Let me put this. So here's our swing. From the time that it left its last triangulation to the time that it found support. Here's our 4-hour swing, right? And in our 1-hour swing, chances are really good it's going to end up somewhat within this range, somewhere within this range. Now, as things continue to triangulate, we may even get one more tighter range. Now, let's talk about all the possibilities that can happen once we've identified these supply and demand zones, right? Because that's really what we're talking about. That's really what happens. You reach a certain level and the buyers kick in. All that supply of buying finds the price that they were demanding, that they wanted that price to hit, and then you get your opposite reaction, right? That bouncing back and forth. So it's really all we've done is found those levels that the market was willing to buy and sell. Now, one of the opportunities you have once you can identify kind of where price is and what that range really means, because, if I were just to open up this 1-hour chart every single time I wanted to trade, this looks like a bunch of gobbledygook. It looks like a bunch of just stuff thrown up on the chart. I see small bodies, long wicks, lots of indecision that doesn't really tell me a whole lot, and I'd be, really easy for me to just go, scrap it. But once I can pull out one time frame and then 2 time frames, it opens up the possibilities for some of this volatility to be absorbed into price, and then we get a clearer picture of price. And what I'm talking about actually works on a number of different time frames. So if you're a 5-minute trader, your next level might be a 15-minute chart and then a 30-minute chart. But the point is you're drawing back from the tiny little tunnel vision scope that we have such a tendency to develop as we trade, and finding that context. And this is that context, these support and resistance levels. One of the things I could do once things really tighten up, if you can imagine the kinetic energy building up inside price as things get tighter and tighter, I could start to watch for a break from the smaller box or boxes and let that kinetic energy propel it toward the top of the box or the bottom of the box, whichever direction it breaks out, right? Those are nifty little trades. They usually happen very quickly. There are plenty of times that happens, and then the trade is over on the breakout candle. These are pretty wide ranges here, so this is really great setup, actually. But there are times, like if we were to look at even the smaller possibility in here, breaking out to the top of that box, that breakout candle could be all of that move. We may not get that smallest opportunity, right? Because sometimes if the market's extremely enthusiastic or extremely fearful, that one big candle can be the move. So there you have it. The other option is if we're ultra conservative or we like a longer term trigger, we could watch for just a break out of the overall area of indecision, which on our daily chart is just going to be an answer to the question, is this retest of the head and shoulders neckline just a retest? In which case, a second close underneath that area of indecision is going to confirm that this has more room to go southward, right? Or was this a fake out? In which case, a close back above this box is going to confirm that it was a breakout, and chances are really good it's going to try to correct up to these levels that it left untouched before. Again, really good reasons to watch this in either direction, right? So there's a couple of different options in there. Which one's best for you? Well, you have to decide that. Long-term trading seems like it's a wonderful option for people who are very busy. I love the daily and the 4-hour chart. I will still take daily and 4-hour trades. It's where I got good at Forex, and it's still my first love. However, it takes a different kind of mindset because a simple candle that is a retest on a daily chart can mean hundreds of pips in drawdown and can be very psychologically damaging, right? So maybe it's not even so much about the schedule that you have to be able to check your charts. Maybe it's more, and actually it's definitely more, about your ability to be patient with a trade. And new beginners, even the most, boy, that's a little redundant, new beginners. Even the most patient beginners, people who are patient in every other aspect of their life, really do have a tendency to lose their patience in Forex because there's so much fear wrapped up in what's at stake. We're talking about our money. Our money is tied to everything that makes us feel safe. Our ability to make our house payment, our ability to put food on the table, our ability to take good care of our kids, right? All of that is wrapped up in our money. So once we understand the source of all of that anxiety, because people come to me all the time and they say, Triffany, I just don't get it. I'm an extremely patient person. I can back test and I can see that it's normal that it's retracing. I know from all of my testing experience that it's normal to retrace. But then in live conditions, they begin to understand that a full day of trading is a lot to stomach if things are moving against you, which they often do, which they should do. If the market's moving the way it should and it's going to work out the way you want it to, chances are really good it's going to move for you and then move against you and then move for you and move against you, right? So that daily and 4-hour chart can be really difficult to stomach. So something like that, if you found that out about yourself, something like waiting for this close outside is going to be really difficult for you to wait for the trigger. And then once that trade is on, you may feel as though you missed the move, you goofed up by waiting so long, all of those things. So with that in mind, you might like something like a 1 hour or a 30-minute chart, or even a 4-hour chart is going to be better than a daily chart. You need to find that nuanced place for yourself. So which of these is better for you, trying to take the breakout of the small box to the top of the larger box? You're only going to know that by developing your own set of data to draw from, your own set of experience to draw from. There's no way that I can determine that for you. Okay, Opla says, once you get let's see, I understand where you generally get your profit target, 100% of the recent move. Where do you put your stop? Is it a close back to the box? That's a fantastic question. So let's say here that I'm waiting for a break outside of the smaller box between 1.2730 and 1.2675. What Opla is talking about from past webinars is what I like to do is take 100% of my box, because generally speaking, if the market is willing to move within the range of the consolidation, once it moves, it's very easy for it to move that same width, that same range. But I don't stop here at 100% of the box. I like to adjust for support and resistance. And in this case, I'm cutting the difference between the extremes of the wicks and these little bodies in here that gets me pretty close to the 161.8, which is a higher probability profit target anyway. And it makes sense support and resistance wise, right? Now, where does my stop loss go? If I were being perfectly honest, which I always try to do with you guys, my very first position is so teeny tiny. It's like 1/4%. It's just enough for me to not be fearful of pulling the trigger. It's just enough for me to get in, and once things are moving, I feel like I was preemptively in the trade without feeling like I have, is it too late? Did it move too far? Should I wait for there's just a whole bunch of mind games that are solved by me taking a fractional position first and foremost. So my very, very first stop loss is probably deeper than most people would want to hear pip-wise, and it usually puts me right around a 1-to-1 reward to risk ratio. However, once the trade is fully on, say it's on a bounce or something, I like to use 2 secondary support and resistance levels. So, and that's within the box. So let's say this were to break out and give me a good, clean, nice candle with a good, strong body, okay? Generally speaking, my first minor support and resistance level is going to be the bottom of that candle. it usually lines up somewhere else within the context of the overall consolidation. It just usually ends up like that. And then I like to go one more level below that. Again, there's usually some other key in there that shows me that that's kind of a level where the market could retest to. And I put a few pips below that. So that's what I like to do. However, if a close back inside the box makes perfect sense, there is nothing wrong with that. The problem is, and it's not really a problem, I should say the learning curve there is to understand your pairs, because some of your pairs have a tendency to overlap their consolidation areas. So a close back inside the box could still be a retest of an area inside of it. The Euro Aussie and the Pound Swiss, they retrace very, very deeply. Even the Dollar Swiss will do this and kind of overlap those areas very deeply. So know your pair, know the behavior of your pair. It's very easy. You know, we go to webinars, we read books, and we start to get a sense of candlesticks, and it's very easy to just look at a chart and feel like you understand that chart. Yes, there's candles. A long body means this, a long wick means that, you know, blah, blah, blah. But really, truly, every single pair has its own personality. It really, really does. So if you're going to choose something like a close back inside the box, you're going to choose a pair that is more likely to simply retrace and tap a level of support and resistance and bounce away than it is to come back to the middle of old zones, bounce around, and then bounce away. So just know your pair. Just know your pair. Fuji says, in my opinion, the 4-hour bearish flag pattern it broke yesterday and retested at the bearish flag. The trend line today, it seems that 1.2600 is the level to watch. I could be wrong. Please correct me. I'm very bearish as well. But because there's reason to look on either direction of the trades right now, I'm willing to take it either way. Now, there are times, even if it triggers opposite of my my bias, there are times I'll walk away from the trade. I want to talk about that, because there's, you know, the school of thought that says just always trade the signal, always trade the signal. I have a tendency to disagree with that. If I can see good reason in my mind on either side of the trade to take a trade, then I'm willing to take it either direction. I don't care if my bias is right or my bias is wrong. I have an overall bearish bias on the euro dollar and the pound dollar both. But that doesn't really mean much, because the market can change its mind at any time. However, if I don't have a good reason in my analysis to believe in one side of the trade, even if it triggers, I'll skip it. Why? Don't I trust my system? What's wrong with my system? Nothing's wrong with my system. It might even work out. But here's why. If I get into a trade that doesn't make sense to me, even if it was planned ahead of time, and I said, okay, well, I'll take it, but I don't like it. Once I'm in that trade, I'm dealing with the psychology of fear and misunderstanding to begin with. Before anything happens with that trade, I've already plugged it into a highly volatile emotional state. Okay? What I'm saying is that if I can see a reason on either side of the trade, and let's say I take a break up above this box and it pulls back to maybe the first level support and resistance, or the second level, even that third level, which is my second minor support and resistance in there, I'm not chewing my nails, because I had reason to take the trade. Everything lined up, it made sense. And I can go that potentially and probably a normal piece of that movement. And I actually like when it pulls against me. I can get in a better position on the second bounce oftentimes. I mean, there's things that I can do that make sense for me. However, if I get in there and I didn't have a really good reason to be long, other than the fact that that candle triggered, I didn't see retracement levels, or the fundamentals didn't make sense to me, or something in there put that seed of doubt in my head, that triggers and I take that trade, any movement against me, I start beating myself up. Now, maybe this isn't true for you. And if this isn't true for you, then throw everything I'm saying out the window. It's not going to hurt my feelings. You have to walk away with the tools that are going to help you. But I know if I come into that trade with the seed of doubt in my mind, that pullback, even if it's normal, even if it's exactly what I would have wanted to see if I felt good about the trade, I start biting my nails. I start getting emotional about the trade. And that's when I start doing really stupid stuff, where I get out thinking, oh, I was wrong. I knew it. I shouldn't have gotten into that. And I get out at a loss, and then it goes my way again. Oh, no, I was right. I knew I should have followed my stupid system. And then I get in again, and, I start playing this mental game with myself. And it doesn't help my trading. It doesn't help my psychology. It doesn't help my confidence. It doesn't help anything. So there are times when it makes sense for me, even if the technical trigger is there, for me to just walk away from the trade. And I'm okay with that. Yeah, it rubs me a little bit when the signal is there, I didn't take it, and it turns out to be a great trade. It rubs me a little, I'd be lying if I didn't say so. But I'd so much rather have that than a huge chunk of my account missing because I was impulsive and stupid and wrapped up in the emotions of the trade. Does that make sense? Let's see. Jerry asked, do you think that personality patterns of pairs relates to the big traders trading the same pairs and following a similar mindset? Yeah, in a lot of ways. And now, of course, one of the other things we've got to consider when we talk about the personalities of the pairs is that some pairs simply carry a higher volume than others. You get something like a euro dollar, you have so much volume in there. It really has a tendency to consolidate a lot in between its movements because you've got all these money makers sort of evening the waters. But you get something like a euro Aussie that isn't traded by the great big guys a whole heck of a lot. Then you get low volume, high volatility situations where any big position being put on moves price very suddenly, very quickly, and makes it a more volatile pair. Then you get something like a pound yen, which is, traded by a lot of people, at one point even more so as its, relationship being a carry trade. But now it's been associated with risks across the board. So it's become somewhat of a self-fulfilling prophecy, right? People who may not have even considered the carry trade or thought it was too risky or have already unwound their carry positions or whatever, when things start to look risky again, they're going to start selling the pound yen. So each one, I think, that's a great question. That's a fantastic question, Jerry. Each one has its own personality based on its positioning in the marketplace overall anyway. That's a really good question. Why do pairs have their own personalities? That's fantastic. So, okay, good. Harley got what I was saying. Great. And Jack's asking about the pound dollar. Let's take a look at that next. Now, before I leave the euro dollar, are there any other questions about anything I've said here? Because we've covered a lot of ground. And I know that we covered a lot of stuff that isn't even about the chart itself, but I really think it's important that you understand above and beyond what's on the charts, you need to understand what's inside of you that triggers the reactions to make you trade or not trade. Whipsaw yourself in and out of positions. Everybody kind of shakes their head and yeah, I know, it's my personal stuff that gets in the way of my trading. Yeah, I know it. And they might know that, but it gets so easily dismissed in the conversation. Everybody's looking for sort of that magic pill that makes everything work in the marketplace, and you have to understand those things about yourself. So, all right, and Haribo wants to look at the pound dollar as well. No questions then about the euro dollar. Great, we'll move on, and we should have plenty of time to go in depth on the pound dollar as well. Now I need to unshare the chart, or else you won't see the whole chart of the pound dollar. And let me move this to the daily. Boy, we must have hammered this one at one point. There's lines everywhere. Let me clean up the chart before I share it again. And we'll take a look. And this is, I'm glad that you actually have even asked Where is it heading next? Because this is one of the benefits of moving to a longer term time frame, is that you can find those levels so much easier. Okay, and let's do that now. Okay, so here we're at the pound dollar daily. Just confirm for me real quick that you can see the entire chart, please. Just making sure we don't have any video problems. Okay, great. Thank you, ABC. Fantastic. So what we have here, and actually if we zoom out from price even just a little bit more, what the pound dollar has to its benefit that the euro dollar does not have is the fact that the euro dollar was sold off. The euro was sold off so quickly and so emotionally that it actually created a whole heck of a lot of retracement levels that did not get retouched and still haven't gotten retouched to the long side of the euro dollar. The pound dollar is it's so much more consistent about retesting. And in fact, I'm a little curious why this still says daily retracement level, but you can see here, gosh, these levels, they just get touched over and over again. Let's zoom back in. So what we have here is we've got this larger area of indecision. We did have a good sell-off of the pound, right? But you can see there's a nice push and pull in here. And this was more than a pullback, wasn't it? I mean, there's no confusion about this one having been an absolute uptrend. We definitely have nice push and pull all the way up, even to the bottom of this old consolidation area. And that kind of sort of reset the game a little bit in terms of allowing the market to hit all of those levels and create sort of a clean slate for the pair. Now we'll zoom back in so we can see these better. And this daily retracement level up here, now when we were talking about this last time, again, we talked about the fact that we had retracement levels on either side of this consolidation area that could be targeted once the market left this little area of indecision. The same one is still up above. It has not been retested. You can see this area of indecision got left so impulsively. There was no retracement. That's all this is. That's all I'm talking about. And you don't have to just look for these that got untouched. Any area of support and resistance works, but these really become significant because once it breaks in the direction of the retracement level, it often gets hit very, very quickly. So that's why I get excited about having those and seeing those on the chart, because the reaction time to those levels just happens so much quicker. And it looks like we've got some problems with the chart. No, I had zoomed out just to see more price. Yeah. Does everybody see it okay now? Thank you, SS7, for explaining that. Okay, it looks like it's okay. Jack says he's not seeing it at all, but let's just unshare and reshare really quick. It takes 2 seconds. There's no reason we can't do that. Okay. So then what we also had labeled. We talked about this. Last time this showed the indecision was a daily retracement level that needed to be hit from this impulsive move. We had an impulsive move away from a very enthusiastic, very emotional move away from 1.5440 that did not come back and get retested. That once it came down, you can see once it left that area of consolidation, it came down and hit it really quickly. That's why I like those even better than ones that have been retested. But I can now just take that off because it's been retraced too. Okay, so let's take a fresh view on this because what we're seeing here is, and this is good because we don't often have a lot of opportunity to talk about what a fresh trend looks like, identifying, developing momentum in a pair. When we see these, these strong moves, these interim moves, and then this fizzling out, this was our tiring out in here, right? And it's always easy to see in retrospect. How do we know when that tiring out is over? Well, we got out of this interim area of indecision in here. It broke. It's actually come back and retested. This is simply the bounce away. This, to my eye, means that we're picking up fresh momentum in the direction of this little downtrend right in here. So this next move should be fairly strong. And the next level of support and resistance is right down here at about 150, 150. Now, am I suggesting that you should get in right now and sell the heck out of this baby and hold on till 150, 150? No. I'm saying that from the daily chart, this is an area where the market gets to easily before it pauses and reconsiders again. So with that in mind, we can start to look at whatever behaviors happen during today's price action. What is our trade plan going to look like in terms of taking a trade? Now, some of you are already short. Maybe some of you are already long, and you're thinking this is that, last little blip downward before it goes long. I mean, do we have any idea whose side of this trade is right now? No, we don't. And that's what makes Forex so risky. Let's move down to our 4-hour chart and see if we can make some good trading plans here. I'm going to get rid of all these boxes. I'm just going to clean up the chart a little bit. These were old conversations. We kind of talked about these pairs ad nauseum, right? So now that we're at this 4-hour chart, the first thing I see is the fact that this little area of consolidation right in here, I'm going to have to label it, with this impulsive candle closing below, it did not get retraced to. So I'm going to label that as a 4-hour retracement level. And maybe these levels don't matter to you. That's fine. Again, it doesn't hurt my feelings. I want you to trade like you trade. I don't want you to trade like I trade. The other thing I'm going to check now that I'm in on the 4-hour chart is to see if, now this isn't technically a double top because it didn't happen at the top of an uptrend. It's happening in an abnormal consolidation area in a downtrend. However, we still have a double resistance rejection, and I want to see if that has actually played out after the trigger. And it has. It's played out to that 200% extension level, which is merely a 100% extension of the range it chose to move last time. Why didn't I consider this wick? I cut the difference between these two candles in here. That's what I did. Okay, I like to kind of cut that difference. I don't like extremes. So knowing now that it's at that 200% extension level, and knowing now that there's a possibility that we could get a retracement at least to 54.40, if not to 55. This tells me that any kind of pause in here, any kind of pullback or breather that this takes, that's going to be my chance to put together a strong trading plan for this pair. Okay? Now, a close below where price is now, where did that level come from? On the daily chart, it was simply a support and resistance level that we identified, last week. And it's sitting on it right now, right? Chances are really good we're going to get a pause in here. If we don't, however, a close below there might be a good opportunity to start looking at the next levels of interest to us as traders. And now I'm kind of identifying some minor support and resistance levels so that we can chunk up a larger trade. If you're going to be, more of a swing trader as opposed to a long-term trader, you don't really want to get in and dig your heels in, especially in these conditions, right? Especially this week in these conditions. So now identifying those levels. Let's see what it looks like on a 1-hour chart. Yeah, on a 1-hour chart, we're starting to see some more of that indecision. Now, the nice thing, I do like the pound. I always recommend the pound dollar to absolute beginners. because it does move. When everything else is getting all freaked out, it still seems to move fairly consistently. We do get these retracement levels from time to time, but not nearly as many as we get on other pairs. And you can see, even in the context of it leaving this area of indecision, look at those small little bodies. But it retouched, it left this area of indecision and retouched. And now we're looking at, with this long shadow underneath this candle, this hammer right here, we're looking at some more indecision. So if this does not end up being a confirmation candle of a reversal, or at least a small body, long wick situation of an area of indecision, and it closes below that 1.5330, that looks like a fairly good trade to start looking at any of these next levels for profit targets. Depending on how you trade. If you're an all-in, all-out kind of person, you're probably going to get all in and then all out at that next level. If you're the person who kind of likes to put on a little bit, let it retrace and goof around, confirm your direction, put on a little bit, then you might hold on to it all the way down to 1.5150. Right? That might be worth it to you to take your time with that trade. It depends. All depends on your own risk profile. It really does. Your own psychology needs to determine that. Okay. Again, we covered a ton of stuff in this pair. Yay! Questions, throw them at me. Give me some good stuff here. Questions about the levels I chose, or questions about triangulation, or even better yet, questions about, how do you overcome this, a string of losses, whatever. Fuji says you call this is an Islander reversal pattern top from 1.6-ish on the daily chart. Any thought? Islander reversal pattern. That's a new term for me. I've never even heard that. Isn't that crazy? Don't you love that I'm that honest? maybe I should be faking it. Oh yeah, the Islander reversal pattern is I don't know, Fuji. Honestly, let's see. Let's go back out to the daily chart. Dropping down from 1.6, Islander reversal pattern. I think it's a great name, but I don't have any input for it. I'm sorry, sweetheart. I should really learn to be a better deceiver. No, I shouldn't. Donnie says, islands are more in stocks where there are session breaks, like a morning star, evening star. Thank you. Okay, now we're on the same page. Can you believe I started an equity? That's totally new. I've never heard that. But thank you. So now let me reevaluate the question here. Do you call us any thought? Yeah, I can see that. The problem is the confirmation candle of that. Of course, with this long shadow, this wouldn't have confirmed anything without it closing that deep. I'm gonna say I don't have any feedback on it at all. This was not in any sense to me anything that said absolute reversal. There was, you get a long enough pause, it could have easily have been a simple consolidation over to the trend line, creating that previous upward channel in here as a retest and then a bounce upward. So there's nothing definitive in that would have told me at the time or even now in retrospect that it was definitely a reversal. If the pound dollar goes to 1.5330, does that mean the lower leg down at present is at 1.29 getting short? Is that a good move? Yeah. Well, and when we talked about this on the, once we broke this down to a 4-hour chart or even a 1-hour chart, and we looked at this as, this hammer right here is potentially a reversal signal. And Jack actually follows up and asks me to explain a confirmation candle. Now, there are many, many patterns when you start learning about candlesticks in general, where you get a candle, a nice hammer like this. Where that long shadow, now think in terms of the story that's being told within the context of the candlestick itself. When we get a strong body in one direction or the other, and I mean a strong, good, solid body, not anything too big, not anything too small, something nice and strong. what we're getting is kind of a definitive answer from the marketplace that there's good selling going on. When we start to get wicks and shadows, however, what we see is the tug of war between the buyers and the sellers. So in the case of a hammer, at one point, those sellers wanted to continue to sell. There was strong selling enthusiasm, okay? And during that candlestick, it doesn't matter what time frame you're on, it's during that candlestick, that snapshot in time, those buyers came back in and wrestled back control. That's the reason why it is potentially a reversal signal. Because if the buyers have the ability to flood enough money into the marketplace to reverse that overall sentiment, then you have the chance that other buyers that have been kind of waiting in the wings, looking for their signal, are going to jump on that and say, this is now cheap and I want to buy it, right? That confirmation candle is a close above that candle of indecision, or in the case of Forex, it's usually an area of indecision. It's very rarely 2 or 3 candles. But the confirmation candle is a candle that closes outside of the area of indecision where the market started to wrestle for control. That's why when we were talking about on the euro dollar, I'm looking for a break outside of that area of indecision. I want the market to do all of its tug of warring without my participation because I don't trade well in those conditions. Some people do. Some people are really good at trading those conditions. I'm not one of them. So that's the definition of a confirmation candle. It confirms that the opposite side of the ticket has gained control and closes back up above the candle that told you a tug of war had begun in the first place. So it will close below this 1.5330. Shows that this little tug of war was a moment in time, that it really didn't mean a shift of power had happened. Does that make sense? I hope. Great question. Okay. Well, it looks like it's about time for me to wrap up, so I'm going to head on out. Let me leave you with my web address, www.triffx.com, 2 F's in the middle. Come by if you like. I know I talk a lot about stuff not related to charts, but that's kind of what I do with my students is I work with people very closely, get to know who they are, get to know what their perception of the charts is, and help them develop, help them brainstorm, help them find those solutions to greed, to fear, to just an overzealousness or an addiction to trading, or, I shouldn't say addiction because that makes me sound like, but that feeling that you have to trade all the time. That's what I do for people. I help people design systems that work around exactly who they are, because I'm sorry, as much as we would love to have a one-size-fits-all trading system, it does not work that way. So the blog itself is free. I hope you'll come by and check it out. The Trader Development course is a 10-week course, small groups, and the next one starts in late October. So check that out too if that's something that you're interested in. And Jack is asking for the email address. It's on this front page if you want it, or here, I'll just type it into the comments. But it's Triffany. Just remember the R. It's not Tiffany, it's Triffany at TRIFF as in Frank, X as in X-ray.com. And yes, I'm going to be at the ITC in Barcelona. Very, very super excited about that. We'll get to trade live together. It's such a unique opportunity. So many of these seminars, you get to hear a lot of theory, but you don't really get to see it in practice. And what FX Street has done with this Traders Conference in terms of limiting the seating is they've kept everything extremely personalized. They've kept everything very intimate. And you'll get a lot of really great attention, a lot of your questions answered. I mean, gosh, how many times do you not even think of a question until you're trying to take a trade on your own anyway? And you wish that person that you just listened to was sitting right right there by your side. That's what the International Trading Conference will do for you. And I will be there. I'm completely stoked about it. I'm very, very excited. Some other fantastic traders are going to be there too. Boris Schlossberg, Chris Capri, Rob Booker, just to name a few. So I hope you'll go to the link and check it out. There's going to be a lot of really good stuff in there. So, yeah, that's my time for today. Hey, guys, thanks for being here. I love that you come. So thank you, everyone, for being here. I really, really do appreciate it. Take good care, and I'll see you next week. Thanks, everyone. Bye-bye.